But more than that, the FX market itself has basically improved. So there's a lot more transparency. So similarly, now we have those sort of market transparency in the FX market. So everybody knows what is available to sell and what's available to buy. And it kind of looked like there was actually a lot more supply than demand in the FX market. And so that transparency itself has rubbed up on the official market. Naturally, rates are likely going to go down. Now, one other reason, of course, is that we've seen our reserves also go up, because now they'll be a lot more prudent with how we're spending money. And the NNPC has finally started giving money back to the CBN. When I mean money, I mean Nigeria's crude oil export inflow. Even though crude oil numbers are not that fantastic, but at least we're seeing crude oil inflow get back into the CBN coffers. I mean, you got to also look at the fact that we don't make subsidy payments that much anymore. That has also helped reduce the amount of dollars that used to be taken away by the NNPC. So that has helped move our FX reserves to over $43 billion. And you can see that in our capital importation report. That has all fed into the FX numbers. And so you're seeing our FX reserves at over $43 billion, which is enough armory for the CBN to essentially supply into the market if they need to. In fact, we heard the central bank is the net buyer of dollars at the moment, which is just incredible. And then one other thing as well is that we're also seeing an increase in remittance flows. Remittance flows means the amount of money that we're getting through our international money transfer operators, like the MoneyGrams of this world. So they are now remitting through official channels. And even though the numbers are not as fantastic as some of us had thought, but they seem quite robust. Hitting about $300 million a day. The CBN wants it to be $1 billion a day, but we think it's around $300 million a day by our own estimates. So these things appear to be the reason why you're seeing the exchange rate strengthen.